See here. That's just an example of how it looks like. So the form itself will look like this. The way the boxes are is the way it looks. So, and it will be a 1099-R. You will see it. You will see it as the taxpayer brings it to you. You will see it. Okay. Go back to. You see, when I clicked on it, it already added into our tax return. Okay. And if you want to remove it, you can just click on the three dots and remove the form. Delete. You can delete it. We didn't need it. I was just showing you an example. Okay, so that's the 1099-R. So on the Social Security benefits, there's this. If the taxpayer had Social Security benefit, it usually comes to a form called 1099 SSA. 1099 SSA. Sorry. I don't see it showing here. That's simple. But the 1099 SSA, once you have it, you add it as the way it looks on that form. Once you add it the way it looks, then it will accumulate here. Okay. Then we have the capital gains, like the Schedule D or the Form 8814, parents' election to report a child's interest dividend. If a child has the parent wants to report interest and dividends for a child, then yes, you can report it on this form, through this form. If I clicked here, it will take me to the form. If I clicked on Schedule D, it will also take me there for the capital gains and losses. Okay, then on line 9, this is the total income. This is different. It's very different from the way it looked before. They have changed a lot of stuff. Like you can see now from 1Z, 2B, 3B, 4B, 5B, 7, 1Z, 2B, okay, 3B, 4B, 5B, 6B, 7B, 7, it's not 7B, and 8. So the total is being added right here, okay? Then the adjusted gross income on line 11, meaning everything from 1A to 10. Anything, if there are any adjustments to income, it will add up to this 11. So we'll see that once we start entering the information from the forms, because you have several of the forms, then you'll see them. You'll see the way it's adding up. Then the standard deduction is that 13,850. That's for a single person. For a single person, the standard deduction or the itemized deduction or standard deduction will add up here. We'll do an itemized, we'll do Schedule A, which is the itemization form. I'll show you how you can increase, instead of you using the standard deduction, which is 13,000, you can use the itemized deductions if the taxpayer has those deductions. Maybe they have a house, they have medical expenses, they have charity, all that. You can add them up and they will increase instead of you having 13,000 as the standard deduction. What does the standard deduction mean? Anybody? What does that mean? Deduction from what? Anybody? Faith? Esther?
Okay, so the standard deduction is the amount that reduces your taxable income.
Exactly, exactly. Yes, it's that amount that reduces your taxable income. So that is what the government has given you. Say, for example, you had 30,000 as your taxable income. It's going to be reduced. Actually, it's not the standard, the taxable income. It's the gross from the gross income. Because now, once it's reduced from 30,000, somebody do that math for me. 30,000 minus 13,850. What are you left with? So out of your 30,000, the government has given you 13,850 that is not going to be taxed. So the rest is going to be taxed. Anybody who has done that math for me, please?
16,150.
16,150. Now that will be 16,150 will be the taxable income. Okay. As you can see on line 15, the taxable income will be the 16. Okay, see, informing is okay. What did I do? Okay, I messed up there. Create the override. Okay, yeah. So I've cleared the override. If you mess up, you just come here to these three dots. It will tell you what to do. You just clear the override. Okay. So, but we'll see all that, the taxable income and all that. We'll see it once we start filling that information. Then from there, it goes to the tax table. It will go to the taxable income. Now we have the 16,000, like we say, 16,150. It will go to the tax table and it will be compared. Now, once you are you are a single person, you are single, your status is single on the tax return, it will compare you as single with that income. How much are you supposed to pay? It will go to the tax table, but it will do it automatically. So it's going to show the taxes will be showing right here on line 16. It will show how much you're supposed to pay. Maybe 10% of 16,000, which may be 1,600. Maybe that's what you're going to pay. Maybe 13%. It all depends with what the taxable is going to show. So automatically, it's not you. You're not going to do the calculations yourself. So it's not something that you should be worried. What you should be worried is to put the information accurately. Whatever is on the W-2, you put on it like it is. That is the heart. The W-2 is the heart of a tax return. So always remember, you have to put the W-2 like it looks, every point of it. We'll see what a W-2 is. I know most of you maybe don't know what a W-2 is. Somebody like Daniel. Daniel, do you know what a W-2 is?
No, not necessarily, but I've heard.
You just heard about it?
Yeah.
Okay, so on Thursday, that's what we are going to begin with. So show up early, everybody show up in time so that this is very interesting. Now we are going to have very interesting. I wanted you to go through the introduction to the tax law, at least to have an idea. But now we are getting into the meat and potatoes of tax preparation. If you really want to be a good tax preparer, because that's what is important for you to be a good tax preparer, you need to be in time. You need to be there so that you can be able to help other people. Okay. So schedules 2, line.
I have a quick question.
What's that?
I have a quick question.
Okay.
If we have the W-2, the ones that that they get for the employers with the Social Security, do we still have to confirm or ask for their Social Security card? Or is that sufficient enough?
No, it's not. It's not because most of those